G'day everyone, welcome back to Pete's Investing. Today is May the 11th, 2023. This is the New Zealand US dollar currency update. We've got our weekly, daily and hourly charts, and we use the weekly primarily as a trending tool. And here we're looking at the triple moving average of the price chart. That's a moving average 3, 5 and 60, along with the CCI 150 moving average 5 and 50. When they're both in alignment like they are at the moment for this week, it's in a bullish momentum. Then looking at the daily, that's also in a bullish momentum on the daily. So predominantly only long trades to be taken. Now looking at this as well, I've got the key support area at 60.84 and a key resistance at 65.38. And since our last update, it actually has appreciated more since then. And I've got a Fibonacci retracement here between the support and resistance. And you can see there it's just hovering around the 61% level. Now that's a key level of Fibonacci, because if it breaks through that, generally it means it's going to correct to the upside. Alternatively, it may bounce to the downside from here, so just be cautious of that. But at the moment, primarily the weekly and daily are showing long trades. On the hourly, and again you can trade any other lower time frame, I'm showing you the hourly here. You can apply this to the 2 hour, 15 minute, whatever suits you. But again, we're looking at the same sort of logic in terms of a trading idea. We enter using the weekly, daily and breakout across the fractals. So you can see here there's a breakout there. So assuming both weekly and daily are long, which they are at the moment, you could trade this with a candle breakout above the fractal there. There's another one there, and so on. And it takes small incremental percentage gains where possible. Also on this one, I'm showing you just again, there's key support and resistance areas, but also that diagonal trend line was drawn earlier, and that was bouncing on top of those highs there, and it's broken through that previous high. So again, don't forget that's a 61% level on the daily. We need to respect that, and it may actually bounce from there possibly, so we just got to be careful of that. But also what I've got up here is a profitability chart and a back test, and this is using that methodology I showed you briefly with a fractal breakout and the moving averages. So you can see here, this is applying the average down approach, and currently it's sitting about 5,370. Again, this is trading the hourly, and it goes back with back testing to as far as October 2021. Now there was a bit of a drawdown here with this multiple entries made, and the way you avoid that, again, you only trade in the direction. This is like a long trades only. So if you look at, if I move the cursor there, you'll notice back here, that's during this period. So up here we've got no long positions to be taken. So up until there. So you'll notice there on the hourly chart, that grey vertical line, that's the first place you'll place a potential long trade. But also notice you need to make sure at that point there, that aligns with the daily chart, the chart in the middle. You can also see a grey chart, a grey vertical line on that one as well. That's where you will potentially take long trades based on the moving averages and the fractal breakout. So again, avoid taking long trades where there is no indicator showing that. With even if the daily is showing long, if the weekly is not showing long, to be extra cautious and safe, avoid taking trades only when both weekly and daily, like they are at the moment, showing a trend in the same direction. So to understand this and other trading ideas, subscribe to my Patreon page for exclusive access to weekly stock scans with average down strategies. We scan stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.